today is a beautiful day. It is June 17th, 2025, and we're doing another one with the same person today, mainly because he brings up what I believe to be his excellent insight to Tesla. Remember, one of the purposes of this channel is to provide you with good information on many things to leverage your life. One of them being is wealth building through the markets, because the banks where you're holding your money, they're not going to build it for you. Your pensions and social security in the future won't cut it anymore. We don't live in the 1960s. Tesla is not only an evaluation that he has done, he's also been constantly right when it came to CoreWeave. If you don't know what CoreWeave stock is, it's for this exact reason why he brings up beautiful insight. I never even knew about CoreWeave. I'll do a future video on CoreWeave and its founding. It's a very crooked but yet legal practice in my honest opinion. But if you follow the money, CoreWeave, being largely staked by Nvidia, is already at the same height as Nvidia. And it went public because of the tariffs causing the chaos in the markets with the volatility and the shifting. It's a different video. I'll explain in further detail for the future. But for now, let's proceed with the information today.
Bloomberg is out this morning to shill Tesla, which is somewhat surprising, but a lot of really good notes out this morning from Bloomberg. First, Tesla's self-driving technology could be safer than Waymo's, given its vast mileage data collected. If their crash data methodologies are comparable, Tesla reports about 0.15 crashes per 1 million miles of vehicle miles driven, versus Waymo's average 1.16 crashes per 1 million miles driven. Now, I'm just going to throw in my comment here that Waymo has literally no driver. Tesla, you've got, this is the crash rate on autopilot. So you have autopilot miles that you're comparing this to, plus a human driver to take over. So a little bit of adjusting probably required there, but that's also a pretty significant difference, right? 0.15 crashes per 1 million miles driven, and Waymo's average being 1.1 crash per million miles driven. That said, you've had substantially more miles driven with Teslas. You've had 3 billion miles driven with Teslas and 22 million Waymo miles. So 22 million Waymo miles divided by 1.16 implies 19 incidents, right? But if I go to Tesla's 3 billion, that's pretty low. 4.5 when you get that. That's pretty dang low. So very, very low on robotaxi-induced accidents there. So you've got a pretty bullish Bloomberg here. Since 2023, Tesla's FSD software has tracked 2.5 billion miles, almost 62 times Waymo's miles. Although, in fairness, also Waymo's only operating in very geo-fenced areas. Waymo's higher incident rate likely stems from its small size, with only 1,000 vehicles versus Tesla's, 1.6 mil. Probably way more by now. Once regulatory hurdles are cleared, Tesla is poised to expand faster than any existing robotaxi, thanks to a sheer volume and linear tech stack. Interesting. So, very bullish piece here from Bloomberg today. They also say that Tesla's vehicles cost 1/7 that of Waymo's. Despite its early lead in robotaxis for Waymo, Waymo faces a scaling challenge versus Tesla. With about 1,500 vehicles in service after 7 years of operations, its growth remains constrained due to a lack of car-producing capabilities. The discontinuation of its current and only model, the Jaguar I-Pace, forced Waymo to seek new partners. Yet Tesla is already equipped with mass production capability, with full control over manufacturing and a self-operated platform. These are advantages that they're giving Tesla here, this idea that Tesla's manufacturing them. Tesla has their own platform. Tesla self-insures. Waymos don't manufacture. Waymo doesn't have insurance. It's all third-party based. And then the mileage that you've got driven here is substantially larger, obviously, for Tesla. Any robo-taxi company that lacks manufacturing might be replaced if a leader exhibits true scale. That's interesting. So they're basically saying, if you don't have manufacturing, you don't have a moat to protect yourself as a robotaxi vehicle. Very interesting. They also talk about how Tesla's vehicle costs about 1/7 that of the price of a Waymo, which is somewhat an ode, I feel like, to what Elon Musk said when he said, Waymos, they cost Waymo. There's also this talk about robotics. Humanoid robotics hold the key to a manufacturing future. They, in here, say the robots are coming, especially in manufacturing, and that human robotics are the only solution to being able to manufacture more because companies simply can't hire enough people at an affordable level. So, in other words, you want to revive U.S. domestic manufacturing? Maybe you need the robots to do the work. The broader picture doesn't scream worker shortage and get me robots now, except in manufacturing. The BLS reported 381,000 unfilled manufacturing jobs in April. That's a lot. With some reports quoting 450,000 vacancies in manufacturing. So in a weird way, even though we talk about job vacancies declining, in manufacturing, you have this wide opening of available jobs for people. So you want a job, go into manufacturing. But then again, who wants to work in manufacturing? Looking at those unfilled factory positions, it's hard to turn that one around. The solution is robots. AI and robots combined to get manufacturing plants to fill those vacancies required with robots. This sets the stage for a Tesla Optimus push, especially with Tesla being one of the front runners in humanoid robotics, in addition to like Figure or Anthropic or others. And then, of course, the Chinese have a bunch of robots too, with Amazon talking about potentially using humanoid robotics to partner with human drivers, which is kind of wild that we'd have humanoid robotics delivery packages before we have robo-taxis, at least broadly, self-driving cars. You've got, beyond FSD, right? This idea that you could buy a Chinese humanoid robotic and have it basically deliver boxes in a neighborhood at the same time as the driver is delivering boxes. So you try to sort of double up your delivery efforts here. Somewhat interesting. Let's see here. We've got, last week, Tesla filed a lawsuit against another engineer about former IP that was stolen from the hand sensors. We covered that story. Honestly, just reading the Tesla complaint, it doesn't look good for that person who stole the stuff. Tesla seems to have all the receipts to show when this individual accessed sensitive Tesla information. Also been tracking Agility Robotics Digit. Bloomberg reported more than a year ago that Amazon was piloting a 5'9" humanoid in a Seattle warehouse, picking bins off shelves and ferrying them to conveyors. That's separate from that Chinese robot. The CEO of that company said that Digit is already working alongside people at Amazon and logistics for dull and repetitive tasks that most humans seek to avoid, and that it's not science fiction and it's already happening. It's pretty remarkable. And again, that's one of the advantages that Tesla has. It's not so much the robotic technology, it's who can actually manufacture all the robots. And I think that's one of the reasons why we've seen Tesla perform so well really over the last couple years here in their sort of recovery coming out of the 2022 crash, is mostly because there's so much enthusiasm around robotics and the potential that Elon's legacy in government was able to pave the way for humanoid robots or self-driving robo-taxis with more broad adoption. So it makes sense because Tesla not only having the AI or the concepts, the actual servos to operate robotics or whatever, they have manufacturing, which unfortunately is terrible in high interest rate environments selling to consumers. Fortunately, a lot of robotics, if we're going to fill manufacturing jobs, don't need to be sold to people, right? Like selling to people, it generally requires lower interest rates. Look at the solar industry, look at Tesla stock during the highest of interest rate environments. It's challenging. But if you can potentially open up a vertical of manufacturing for the government, like a military defense contractor, or you open the door to manufacturing for, really rich corporations, like what we've seen with Google and Meta and Microsoft buying from TSM, NVIDIA chips and otherwise. Well, now all of a sudden you're manufacturing for a very rich cohort. And I would argue that manufacturers in America, especially if you combine Donald Trump's full depreciation benefits, robots in a few years could be very interesting, because you could buy a robot for $25K or whatever, fully depreciate it year one, thanks to Donald Trump's, big beautiful bill and capital infrastructure incentives. And now you look and go, okay, well, who's actually making the robots? Well, you can get a Chinese robot, or you could get a Tesla-made robot. And then that's kind of where price is really going to be the war. Tesla's basically the only US-based mass manufacturer for robots that we could tell at this point. There are plenty of prototypes, but beyond that, it's going to be China. And so then the question becomes, are we going to import Chinese robots, or are we going to prevent the importation of Chinese robots like we prevent the importation of Chinese cars? I mean, if we are to say that, companies will just buy Chinese robots instead of US robots, well, then why don't we all have Chinese cars? Well, because we've been protecting our U.S. industry through protectionist policies, and it's possible the same thing could happen with Tesla. So that said, I still think the valuation is a little bit stretchy for Tesla. We've thought this for a while. The manufacturing business is maybe worth, at the moment, based on sales today, $1.40 a share, $140 or so, which gives you about $190 of premium for that future potential in manufacturing for robotics, along with, obviously, the robotaxi division. That said, kind of a good point here from Bloomberg. You've got optimistic data on safety, you've got progress on robotaxi. Obviously, I don't think it'll go as quickly as Elon pitches in terms of like broader-based robotaxi adoption, but when it comes, the one who could print robotaxis would almost certainly be Tesla over Waymo, unless they just pick up leftover inventory from like Toyotas or whatever and partner with Toyota. Although I actually feel like I did hear about a Toyota partnership between the two. That would be interesting. Let me just double check this. Toyota, Waymo. Did they ever? Yeah. See, and that makes a lot of sense. Look at that. This just happened. Oh, and I've been on this page before. I've highlighted this. Waymo and Toyota outlined strategic partnership. So to me, this is a way of saying, like, Waymo is realizing that Tesla is coming, and the advantage Tesla has is manufacturing. Well, we already import a lot of Toyotas. So could Toyota be the manufacturer for those robotaxis? And then you wonder, could someone like a TSM, basically, Taiwan Semiconductors, could they get into manufacturing robots to where it's not necessarily Chinese companies, but sort of like Chinese adjacent, right? I suppose if we're talking about Taiwanese manufacturing, some OG Chinese would say that's also Chinese manufacturing, but then we get into a whole geopolitical issue, and we don't need to go down that road. So, but honestly, I mean, broadly bullish there on Tesla. I will say, again, I think that, this already. This is old news. I think the market is a little frothy right now. But let's take a look at Tesla's current valuation, where we sit. So I want to just see, because the estimates for Tesla's growth have really been rising over the past few, I would say about 8 weeks or so. It seems like every time I load up a financial analysis on Tesla, the Wall Street forecast for future earnings growth is just going up and up and up. So I think the last analysis I did is we were at like 42% EPS growth. Current estimates are 50.08 plus 30.38. There we go, I did that right. Okay, 30. Let me do this again. I'll just put it down. 50.08 plus 30.38 EPS growth plus 30.18 plus 43.26 equals divided by 4. Oh, interesting. They actually got written down a little bit. So now the average 4-year forward growth is sitting at about 38.4. And so 38.4, 327 on the stock divided by 192. It's trading for 170 times divided by 38.4. Dude, Tesla's trading for a 4.4 peg right now. I mean, that's That's half as expensive as Palantir, and that's not anything to brag about right now. So definitely no panic in the stock market valuation, that's for sure. But very interesting to see the sooths, like the doomers at Bloomberg, actually writing such optimistic things about Tesla over, Waymo, and more of like the Google, child that Bloomberg, I feel like, usually likes to prop up.
We'll conclude it there, and as always, thanks for watching. I'll link the video below to this exact video so you can watch the rest for yourself. This is a small bit of it. And yeah, hope you enjoy.